Well, let's just take a look at these figures in depth now with Pelham Smithers from Pelham Smithers Associates. Thank you so much for coming to speak to us. So what do you make of what we've heard so far?
Well, the figures, the results were telegraphed back on Monday, so nobody will be focusing too heavily on those.
Right.
They're going to be looking at these forecasts. The concern, obviously, they're coming lower than analysts' expectations, but it's quite possible that some of the money that Sony made in the fourth quarter of this year was in financial services on a mark-to-market basis of the shares that the financial business owns. Obviously, the markets have fallen since then, so it's quite possible that Sony's having to be quite cautious going into this year because some of the profit it made last year, it'll have to give back this year on a mark-to-market basis. So analysts will be looking at that. If that's what happens, then I think there'll be a little bit of relief. These figures are low, and Sony isn't notorious. Some Japanese companies do come out with low forecasts, and people say, oh, it's always conservative. Sony's not historically been like that, so these figures will be taken on face value.
So what do we know then about the scale of demand for their products?
Well, I think that you have to sort of go back to where we were 18 months ago.
Yeah.
And people were really talking about Sony going bankrupt at the time. There was widespread discussion, would Sony survive this crisis? Well, not only did they survive, but they actually made money at the operating level last year, which I think, if you go back to where we were 18 months ago, is a phenomenal achievement. So they've taken costs out of the equation, and despite the sort of plethora of competing products, they've managed to maintain sales. I mean, they still sell an awful lot of goods, and if they can now turn that sales into profits by just getting some sort of trendier products out there, getting the Sony brand value back, then, you know, a company which always has great potential will start to deliver.
And what about, you mentioned cost cutting there. I mean, how much have they managed to save by shedding jobs?
Oh, I mean, you know, billions of dollars, you know, $2 to $3 billion probably already. And from the looks of things, from what's going on this year, we're expecting them to continue to restructure into the recovery. And this is a concept which, obviously, anybody who's looked at American stocks through the 1990s, you know, will understand. Very new concept for Japanese companies, because they tend to sort of take the brakes off when the profit starts to recover. That's always been the problem, and that's why Sony is quite an interesting company right now. Obviously, you know, Anglo-American management in there, doing 1990s-style American restructuring into the recovery.
And of course, they will soon be issuing 3D television screens. I mean, how much of a significant boost might that give revenue?
This year, probably not a lot. It's a great story, and E3 and Christmas and stuff, a lot of focus on it. I mean, when Avatar comes out on 3D Blu-ray prior to Christmas, I mean, everybody's going to be looking at this and saying, this is the great story for Sony, because it's a triple winner for them. Sell the TVs, sell the 3D Blu-ray players, and sell Blu-ray discs, for which they make a bit of money. But realistically, 3D this year, quite a small business. Next year, it becomes increasingly mainstream. And so really, we're not, as a firm researching Sony, that interested really about this year's earnings. We're much more interested about fiscal 11, i.e. the year to March 2012. That is when all of this restructuring story, all of the top-line gains and this 3D story could all gel.
Okay, well, thank you so much for sharing your thoughts, your analysis, Pelham Smithers. Appreciate it.